Good afternoon, everyone. Welcome to today's daily recap. Getting started a little later than usual. Here on the East Coast, everybody's hunkering down we're setting up for the big one, so they say. Hopefully the snow isn't too bad. I don't know what kind of effect it's going to have on tomorrow's market, depending on the intensity of the storm. The market may even be closed. I know it's a very the market doesn't close often. I do recall over the last couple of years we did have one snowstorm that did actually shut the exchange down. So we'll see what kind of happens tomorrow. I suspect the market will be open, but again, I have no real way of knowing that for certain. At this point, it is now the close of trade on Monday, and a session that really was very interesting in that last night after the news on Greece, the market clearly was gapping down. I think I saw the market down about 12 or 13 handles last night, and then by the time we opened, we were basically flat. So we're still seeing that overnight volatility, but the market seems to not really care. We continue to travel down the road of non-direction. Although we did see a nice day today on the upside. Here's a nice hourly chart for you. This is the spiders. We're still driving that, like I said, the map to nowhere. And at some point, we will be somewhere, right? So we have this big sort of, back and forth, and it's just not a real. We're not seeing higher highs and higher lows. We did obviously, if you look at the hourly over the last few weeks and even back further than that, there's definitely the line in the sand at this point, down here. The market obviously has again that line in the sand here on the upside with even this lower high to contend with. Now, as I sit here and draw up these charts, the market the market is in a, like I said, a very, very non-directional type of trade right now, and it's very, very hard to buy at highs, as tempting as it may be to want to buy at highs or to short at lows. And I know that that's very much a human nature instinct. You want to play a breakout or you want to play a breakdown, looking for the market to change its tone and get that upside movement or get that downside movement. But it's just, like I said, for everybody that, was a buyer, up here, and even up here, chasing a non-directional market both to the upside or to the downside can be a very, very dangerous type of trade. Is, traders down here looking for breakdowns, are now sitting with, a market that's kind of, hovering. And at some point we will clearly break out of this range. When that day is, it's hard to really say. I can't provide that insight. But what I can tell you is, so long as we continue to go at this day by day, you just have to take it one day at a time until such point the market really tips its hand. Now, I'm not going to get in the conversation or the dialogue about, I think we're going to go up or I think we're going to go down, because right now it doesn't really matter. The market will ultimately, tip its hand, and like I said, when it does, that'll be the path of least direction. Trying to play the breakout is where traders can get caught, because one day, we look like we're going to go higher, we look like, we're going to pop to the upside, but then, a day later we're, right back where we started. So just let it be until it isn't. I suspect it'll stay this way through earnings season. We do have a lot of big names coming out this week with Apple and Google and a whole bunch of stocks. So let's just kind of let the market do what it's going to do. Headlines is not really, I think, a safe play right now. You're going to see headlines, week in and week out, and they're going to do what they're not necessarily driving. I will say the market is absorbing and building this nice base here as we continue to look at a weekly. This is not a new pattern. We've been in this, holding pattern for, several weeks at this point, going back to, early December, even late November, as we continue to kind of pop around in this range. So at some point, the market, like I said, will pick a direction, and that will be probably the trade that sustains for a longer period of time, or a trade that, provides more opportunity in terms of, being able to put money to work and getting some follow through. So we'll just kind of continue to monitor and watch. As far as today goes, like I said, it was a relatively quiet session overall. With the gap down, you did see some snapbacks in some of the banks. Here's Goldman gapping down and trading up today off the gap down, but clearly, still not a very strong looking chart here. Let's see, it did test into these lows down here into this general range and snapped off those lows. So let's see if we get, there could be one more leg up here, maybe fill this open gap before it meets some larger resistance. And banks have been hit, obviously, over the last couple of weeks. You've seen some of these, bank names, really kind of get whacked. And even financial services overall, and that doesn't even include banks, American Express. Today, not even, American Express not even catching a bounce here, making new lows and looking like it wants to trade back to these October lows. And banks to me are always, not necessarily a place that I think that there's you need to be, but definitely a place that I'm always watching for clues about general market direction. As banks are always very, very widely watched and a great barometer for future price movement or overall market price movement. It is a very select tape right now. Biotechs continue to, I think, dominate the upside. Here's the IBB, which is a long candidate in our off the charts product, but today breaking out to new highs again through that 324 spot. Some biotechs continue to act really well. Biogen, a very, very choppy type of price movement, but slowly starting to wind itself up for possibly another big push to the upside. Amgen not really performing all that well, but Amgen, like I said, with biotechs, these things can pop on a day's notice. So be on alert as these biotech stocks continue to work. Celgene sitting at highs, Gilead Sciences, snapping back. So, if you're looking for long opportunities, it continues to be the place I think that provides the path of least resistance on the long side. Big momentum stocks, are very, very choppy. As the market kind of sits and waits for Apple, I know Apple always a very widely anticipated earnings report. Apple very much like the market sits in this general range, let's say between 114, 115 on the upside and 105, 106 here, and we've seen these highs and lows tested 2 or 3 times on each side. So it's a very, very choppy trade. And again, like I said, it's a great example of the challenge of this market, because when the stock is sitting down here, it clearly looks like it wants to go lower, and as it sits up here, I'm sure a lot of money is going to come in and say, okay, well, this time it's going to break out. So with earnings after the close, I believe it's tomorrow, certainly could be a driver for the the Nasdaq and a better part of technology in general. Around the horn, I'm seeing, like I said, trades on both sides. On the weak side, G-Pro, as much as I know people are looking to try and pick bottoms here, clearly not looking like it wants higher. It's, kind of flopped around off of this pivot low from last week, or from 2 weeks ago, I should say, but not, any real momentum kicking in here, any real, fresh money look like it's being put to work. So G-Pro, one of those here today, gone tomorrow trades. Netflix, post earnings, obviously it's just, had that huge gap up and just beelining for this open gap. The open gap closing right around 448, 449. So we saw as high as just under 448 today. So this gap is effectively closed, but still, still seems like it wants higher. Obviously, if you look at a weekly in Netflix, definitely going to be a lot of resistance up in this 450, upper 480s, lower 450s area. So if you were fortunate enough to participate in this upside, that's great, but make sure you're locking in profits. That's really the only way you're going to get ahead in this tape is if you happen to get on the right side of a big trade like that. You got to make sure you lock it in. As I said, technology tends to be very choppy. Amazon, popping up all in a matter of 2 or 3 days here, but Amazon overall still a real tough trade with not a real clear commitment to upside, and clearly the weekly still needs a lot of time to repair itself before we see any real upside. I think as far as the overall of Amazon goes, if it can get above that 315 level plus or minus, you might see some fresh buying step in. Priceline, another big momentum name, still another selection for off the charts. Still not really seeing a whole lot of buyers step in. Here's a daily chart. I'll just kind of back it up. Bouncing off these lows where we traded down to just below $1,000 a share and snapping back, but not a ton of momentum or volume on this snapback so far. So we'll keep an eye on that. As if the market does turn down, I think some of these stocks we'll see lower. So like I said, it is a market where you really need to have a very clear focus and very short term time frames. I think anything beyond a few days is until the market really tips its hand is going to be a tougher trade. So make sure you pick and choose your battles wisely. As always, I hope everybody on the East Coast stays safe and warm, and hopefully the snow isn't all that bad. But I suspect tomorrow I'll be doing the morning call and the recap. I'm sure Scott will probably get snowed out of New York. Most people are going to stay home tomorrow. And like I said, stay safe, and I will talk to you later. Have a nice day.